This video gives a clear picture of how Warren Buffett applies the 5 key themes of the book, The Intelligent Investor, in his investment choices. The Intelligent Investor by Benjamin Graham is a classic investment book that offers practical advice for investors of all levels of experience. Benjamin Graham was the investing mentor and godfather of Warren Buffett, so the book reflects the practical investment decisions made by Buffett. Graham advocated for a value-oriented approach to investing, which involves seeking out undervalued or underpriced securities that have the potential to generate long-term returns. For example, he might recommend buying shares of a well-established company that is temporarily underperforming due to market conditions, with the expectation that the company's stock price will eventually recover. Graham also emphasizes the importance of diversification, long-term focus, and emotional discipline in investing. He advises investors to diversify their portfolios by holding a mix of stocks, bonds, and cash, and to hold on to investments for extended periods of time in order to benefit from compound returns. He also advises investors to remain calm and rational when making investment decisions, and avoid letting their emotions cloud their judgment. The first theme from The Intelligent Investor by Benjamin Graham is value investing, which involves seeking out undervalued or underpriced securities that have the potential to generate long-term returns. Graham advises investors to focus on understanding the intrinsic value of an asset, rather than relying on short-term market fluctuations, and to buy when prices are low and sell when they are high. Warren Buffett, one of the most successful investors of all time, is known for his commitment to value investing. Rather than chasing after the latest trends or trying to time the market, Buffett has built his wealth by patiently seeking out undervalued companies with strong fundamentals and holding on to them for the long term. For example, Berkshire Hathaway, the holding company that Buffett runs, has made successful investments in companies such as Coca-Cola and American Express, which were undervalued at the time of purchase, but have since generated strong returns. One example of value investing might be buying shares of a well-established company that is temporarily underperforming due to market conditions, with the expectation that the company's stock price will eventually recover. For example, let's say that a company with a strong track record of profitability and growth experiences a temporary decline in sales due to economic recession. An investor following a value investing strategy might recognize that the company's current stock price does not accurately reflect its long-term potential and decide to buy shares at a discounted price. If the company's performance eventually recovers, as the investor expects, the stock price will likely increase, resulting in a profit for the investor. By the way, you can call me Kevin. I discuss matters of personal finance and investments. Because I do considerable research to provide you quality information, I humbly ask that you subscribe and like the video to help my channel reach more individuals like you. I want to provide 100,000 subscribers with educational topics in the next few years. So help me reach this target. Let's continue. The second theme from The Intelligent Investor by Benjamin Graham is diversification, which involves spreading risk across a range of investments in order to reduce the impact of any individual investment's performance. Graham advises investors to diversify their portfolios by holding a mix of stocks, bonds, and cash, and to diversify within each asset class. Warren Buffett is known for his commitment to diversification. Rather than putting all of his eggs in one basket, Buffett has built a diverse portfolio of investments that includes a mix of stocks, bonds, and other assets. For example, Berkshire Hathaway, the holding company that Buffett runs, owns a diverse range of businesses, including insurance companies, retail stores, and industrial companies. In addition to diversifying across different types of business, Buffett also diversifies within each business by investing in a range of industries and geographic regions. This helps to spread risk and reduce the impact of any single investment's performance on the overall portfolio. The third theme from The Intelligent Investor by Benjamin Graham is the concept of a margin of safety, which involves building in a cushion of protection when making investment decisions. Graham advises investors to only buy securities that are significantly undervalued relative to their intrinsic value, in order to protect against potential losses if the market does not perform as expected. This margin of safety helps to reduce risk and increase the chances of generating positive returns. Warren Buffett is known for applying the concept of a margin of safety in his investment decisions. Rather than taking on excessive risk, Buffett looks for opportunities where he can buy companies at a discount to their intrinsic value, thereby creating a margin of safety. For example, when Berkshire Hathaway acquired the railroad company Burlington Northern Santa Fe, it paid a price that was significantly lower than the company's intrinsic value, creating a margin of safety for the investment. By only making investments that offer a margin of safety, Buffett is able to reduce risk and increase the chances of generating positive returns over the long term. The concept of a margin of safety is an important aspect of disciplined investing, as it helps investors to protect against potential losses and increase their chances of success. By building in a cushion of protection when making investment decisions, investors can reduce risk and increase the likelihood of generating long-term returns. The fourth theme from The Intelligent Investor by Benjamin Graham is the importance of a long-term focus in investing. Graham advises investors to hold onto investments for extended periods of time in order to benefit from compound returns and to avoid making impulsive decisions based on short-term market movement. Warren Buffett is known for his commitment to a long-term approach to investing. Rather than attempting to time the market or making impulsive decisions based on short-term fluctuations, Buffett has built his wealth by patiently holding onto investments for extended periods of time. For example, Berkshire Hathaway has held onto its investment in Coca-Cola for decades, allowing it to benefit from compound returns over time. The fifth theme from The Intelligent Investor by Benjamin Graham is the importance of emotional discipline in investing. Graham advises investors to remain calm and rational when making investment decisions and to avoid letting their emotions cloud their judgment. He believes that investors can make poor decisions when they are swayed by fear or greed, and advises them to approach investing with a clear and rational mindset. Warren Buffett is known for his emotional discipline when it comes to investing. Rather than getting caught up in market hype or reacting to short-term fluctuations, Buffett has built his wealth by staying focused on the long term and avoiding impulsive decisions. For example, during the financial crisis of 2008, many investors panicked and sold their stocks at a loss, but Buffett remained calm and even increased his investments in strong companies that he believed were undervalued. This emotional discipline allowed him to take advantage of market opportunities and generate strong returns over the long term. In addition to staying calm during times of market turmoil, Buffett also avoids letting his emotions cloud his judgment when evaluating investment opportunities. He is known for carefully analyzing companies and their prospects before making investment decisions, and for avoiding investments that he believes are overvalued or risky. By approaching investing with a clear and rational mindset, Buffett is able to make sound investment decisions and avoid the pitfalls of emotional investing. In conclusion, The Intelligent Investor by Benjamin Graham presents 5 key themes for successful investing: value investing, diversification, a margin of safety, a long-term focus, and emotional discipline. To practice these themes successfully, investors should take the time to understand the intrinsic value of an asset and seek out undervalued or underpriced securities that have the potential to generate long-term returns. They should also diversify their portfolios by holding a mix of stocks, bonds, and cash, and diversify within each asset class to reduce risk. By building in a margin of safety when making investment decisions, investors can protect against potential losses and increase their chances of success. In addition, they should adopt a long-term focus and hold onto investments for extended periods of time in order to benefit from compound returns. Finally, investors should strive to maintain emotional discipline by remaining calm and rational when making investment decisions and avoiding letting their emotions cloud their judgment. By following these themes and practicing disciplined investing, investors can increase their chances of success and build wealth over time. It is important to remember, however, that investing carries inherent risks and there is no guarantee of success. Investors should carefully consider their financial goals and risk tolerance before making any investment decision. Above all, please subscribe to my channel and like the video for the algorithm. Meanwhile, click the video popping up in your screen. See you there.